to the show. Today we'll be talking about GameStop, stock symbol GME, and it's been about a week and 2 days of trading after they did a split via Dividend. Today is August 1st, 2022. Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Let's start. Let's start with the Drs Calculator. If you're not familiar with this is computershared.net. They perform an estimate of how many shares have been directly registered. They start with the number of shares that have been issued. They subtract out the institutions, mutual funds, ETFs, and insiders, and then they get the shares that are left, which is basically retail, right? So we start with 303 million shares, and then we're left with about 135 million shares for retail. This is typically what's known as the float. Okay. Of the 135 million shares that retail owns, they're estimating that approximately 67 million shares have been directly registered, which leaves about another 67.8 million shares left, or approximately 50% almost have been directly registered. How accurate are they? Well, this is where we have their estimates over time, and the white dots are the released DRS numbers by GameStop of how many shares have been directly registered. And as you can see, they've been pretty much spot on. So I'm guessing that this DRS calculator is pretty much close to what we're expecting here. Approximately 50% directly registered. So that's good news. The float is smaller than we think, right? We also have some interesting info that came out because it is the start of the month, and we recently had the end of month data from the SEC, which is the failures to deliver. They are normally updated at the twice a month with data that's usually half a month old, right? So the July first half of 2022 data has been released, and we have fails to deliver from the SEC. There's a good site called ChartExchange.com, and you can view what the fails to deliver are in bar chart format and compare that to the price. The price is in yellow. And as we can see, on July 14th, there was a large number of failures to deliver, 220,000 shares. In fact, with GameStop, there's a lot of failures to deliver, which seems to be indicating that there's a lot of shares that have been... It indicates that there may have been a lot of shares that have been sold that are synthetic or that have been naked shorted. We'll see. Anyway, the dates for FTDs do not yet include the GameStop split via Dividend because it ends around the end. It ends around the middle of July, right? So these are pre-split via Dividend numbers, of course, and we can look, however, at what the borrowed shares are from GameStop by looking at Stockscera, pythonanywhere.com, and we see that we can look at the borrow fee and the shares available. We can see that when the shares available drops very low, the borrowed fees increase dramatically. And in one case, the borrowed fees went over 100% for very recently, and the number of shares that are available is relatively speaking low compared to just February of 2019, for instance, even, right? So the number of shares available to borrow has decreased significantly, and the borrow fees have increased. They're currently somewhere around 30% or so, 32%, and there's about 100,000 shares available to borrow. Okay, let's look at the stock price. So the split happened on the 22nd, and we had one full day of trading on the 22nd, and the price went down after the split. And it's been relatively lower since the split's been going on. So we haven't seen much price action. We do note that the volume has decreased substantially. So the number of shares being traded every day has decreased compared to what is normally traded, right? Normally we see a much higher volume if you look to the left, for instance, right? Which brings us to tweets and what's going on in social media. So in case you're not aware, there have been a number of problems with brokers' back offices in GameStop. This is a tweet by Unusual Whales. Links will be provided, of course, as links are always provided. Anyway, there have been an unusually large number of problems with broker back offices and spikes in FTDs with GameStop, particularly among German brokers, who seem to be unable to get shares to their users, right, following the GME split via dividend event. User of Intellect has to say the short interest keeps climbing, but there is no hope. For shorts, that is. The submission to the will of the people will be glorious. Retail is not selling at half of these prices. Hell, with it even at zero, we sit and enjoy. Shorts are holding high-risk assets. AMC GME. Which leads us to a really interesting set of tweets by Dave Lauer. We will be revisiting this. It sounds like the GME stock split dividend has completely destroyed some broker back office systems. I keep hearing about the nightmare of dealing with TD Ameritrade. Also sounds like overseas brokers are having serious problems, and German brokers are struggling getting shares to people. And he goes on to say that it's my opinion at this point, it's a bit late in the game. If you haven't received your shares, you should get concerned. Okay. For U.S. brokers, you should push hard to get someone senior who can help. For overseas, it's less clear what your options are. People are asking me whether this is the first split as dividend and why brokers are having such problems. It's not the first. It's also not normal. So this is very much an edge case. And payment for order flow brokers usually don't invest in any tech. That doesn't result in their customers trading more. I think generally with GameStop, we've seen a lot of back office problems, such as the spikes in FTDs, failures to deliver. It is possible that distributing the split as a dividend has exposed a lot more problems in how brokers are booking and holding shares for their customers. FINRA should investigate. Even when shares are received, some people report that the broker treated them as trades, not as a split. If the broker underinvests in back office systems, cause tax implications for their clients, that's a huge problem. You'll want to make sure your tax forms are correct next year. He's completely right about that. And there's been a reply by MB, says, I've been monitoring data on other splits, pre and post split, and have not seen anything remotely like what's happening with GameStop. Definitely haven't heard of the inability to deliver shares on other tickers. This seems insane. STOC __ says the DTCC appears to have issued incorrect guidance to foreign financial institutions. Sorry, I meant the DTCC. Okay. Anyway, so confusion sets in. What's really going on? So let me give you an idea of what's going on. For instance, we've seen tweets like this from Interactive Brokers where they basically say, hey, WTF is happening. Interactive Brokers removed my Splividend shares, and now I'm short. And they gave me a GME DWAC, WTF. This particular post was deleted by the person who posted it. But if you look in the comments, it says the GME DWAC might be a deposit withdrawal at custodian, a mechanism to transfer between broker and direct registering with the DTC. See Investopedia for full explanation. It's how institutions register their shares in the name of the broker they use to execute their trades. Why it would show up in your account and why they gave you a short position is pretty weird, though. If it was me, I would be on the phone to them and asking some very pointed questions. Okay. So, yeah, there's a lot going on there. Anyway, this particular post on Reddit was deleted. But if we look at Superstonk on Reddit, we can see some posts which were not deleted. Like this one. Interactive Brokers have admitted to opening a short position on my mate's account. Details inside of major fuckery. Test your account. Check your accounts. Okay. He provides screenshots over here as to what's going on. Our system reflects that recently some corporate actions took place on GME. So you are short on 3 shares of GME and 1 share of GME DWAC. Your account is currently in negative and not margin compliant. So this person got a margin call as a result, right? He says, it's illegal to open short positions for me. I have screenshotted the conversation and we'll be back in touch shortly. And the person on the other end of the line said, yes, it's a cash account, so I understand that, but due to a corporate action, it happened. Basically, they're saying, hey, you're screwed. You're now, you've got a margin call. What? What's going on? No, yeah. So Apparently, there's an update that says they've removed the short position, asked them why they were there in the first place, and the excuse they came up with since corporate action isn't really flying. They said it's not a corporate action, and they said the short position's been removed. So he said, thank you. Can you please inform me why it was there in the first place? And he says, I'll let you know what they say. And the final update is, can you please inform me why it was there in the first place? He says, as I mentioned, there is an issue at our end because of it was showing a short position. This has been rectified. If you still want, I can check further back to you and get back to you via web ticket. So he says, yes, please contact me further via web ticket. I very much look forward to understanding why this happened. So that's a minor issue here that's been going on, and I think that's an Interactive Brokers problem. But meanwhile, in German apes are reporting that German banks and brokers have removed 75% of their GME shares at the end of the day. Where'd they go? What happened? Oh my goodness. Well, at many well-known German brokers, the GME split shares were booked out again. These include Sparkasse, DKB, and Volksbank. So this guy, Josh, says, my Splividend shares are also gone as of now. So things are going on here. Josh says, I initiated my broker transfer for them, but it didn't go through yet. Takes up to 14 days. From there, I have to DRS them. Pretty sure they'll be reinstated by Monday, though. We'll see. So, Panic is spreading. So, the German Volksbank recently deleted all Dividend shares. Almost with all German banks and brokers, the Dividend shares are gone. German update. S-Broker sent me this. It basically boils down to the fact that they booked as a split. Now they have to rebook as a divvy. Last sentence says that they will book separately. Okay. So they got some sort of email from Germany and written in German. I can't really read German, so we'll move on. But anyway, so this is the posting about the German Volksbank deleting all the Dividend shares. With almost all German banks and brokers, the Dividend shares are gone. This took place, I believe yesterday or so. We'll see. Anyway, morning update. The shares in the Volksbank account are still not back, but I got a few messages that explain the situation, or attempt to explain it at least. So, dear deposit account customer, we've canceled the transaction with value date 7/26/2022. This results in the following posting. Write-off means booking out. Unit XX GameStop Corp Reg shares, blah, blah, blah. The company's stock split has been withdrawn. Subsequently, a stock dividend will be recorded at a ratio of 1:3. You will receive the credit for the new shares from the stock dividend by means of a separate booking. We apologize for any inconvenience caused. Seems to be there's a lot of stuff going on in Germany here. And, going on and on. So there's tons of stuff going on. It's not clear what's going on in Germany, but people are having issues. Now, it matters whether, how you get your stock split, right? Because it actually matters for tax purposes and things like that. Basis calculations, all sorts of stuff, right? Anyway, so here we are. It turns out that there's about 8 brokers in Germany. It turns out there's about 9 brokers, now 10, as a result of the update, that have been having these problems, okay? And there suspects that GameStop is shorted multiple times over as a result of that. So they're having issues delivering shares in Germany. This is not just on Superstock. GME Jungle also on Reddit has postings about this. For instance, here it says on GME Jungle, my broker said my Splividend shares are blocked to prevent short selling. Huh? To prevent short selling? So I have some shares with this German broker, S-Broker, and I also received my Splividend shares on time, but they were blocked from trading. Blah, 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 blah. It's very likely these shares are only placeholders, of course, and that you cannot trade placeholders. After almost a week, the shares were still blocked. I asked 2 days ago when I would have access to my entire portfolio again, and because in fact 3/4 of it is blocked. Yesterday, I received the message the shares were unlocked and I could theoretically trade them all again. Interestingly, today I got another mail from S-Broker which had the following content. The blocking of securities gained through corporate actions remains in place until the delivery of the pieces in question have been confirmed by the depository in order to prevent short selling. In the meantime, the block has been lifted. Prevent short selling? So the answer is they're not talking about short selling on your part necessarily, the client's part. They're talking about potential short selling from the broker part, I think. So potential short selling to the client. Hard to say, okay? And again, we see a good a tweet from or a good comment from Dr. Susanne Trimbath, and she had her saying this. She said, "Wait, what? You had one phantom share for which your broker did not get any split shares, so they marked your account as owing them 3 shares? It seems the short is actually internal to them and should never have been shown on a customer statement, but it happened, and you have the document." So there you go. So the broker probably has a short position to the customer, and it is not supposed to be shown to the customer, and that means that the customer has an IOU, not an actual share. So we'll see. Again, on Superstonk, we see German broker Comdirect says the DTCC told the depository that the dividend would not be treated as a dividend, but as a regular stock split. So now the brokers in Germany are saying, hey, look, we're just doing what we're told, man. Okay? It says this info comes from the following thread in Comdirect support forums. Okay? Translation: the stock split in this class is correct, and there will be no cancellation or need for cancellation. The rumors circulating in the market that this capital measure is a stock dividend are false. So basically, they're trying to say this is a stock split and not a stock dividend. And the two have very different implications, right? This is actually a split via dividend. But in either case, they have to figure out how to treat this. And right now they're saying if they can treat it like a split, okay? So, translation. The stock split in this class is correct, and there will be no cancellation or need for cancellation. Rumors circulating in the market that this capital measure is a stock dividend are false. This is what's coming out of Germany and the German brokers, right? Further, the event has been checked again with the DTCC and still listed here as a stock split. So this information could be coming from the DTCC, the Depository Trust and Clearing Corporation in the US. Okay, and it could be showing up just, to the broker. But in either case, that leads to this posting by Shane FAE. So it seems entirely possible that the DTCC has gone against GameStop's wishes and authorized a regular stock split instead of a split via dividend. German brokers were just the first to say something. Okay, it's possible, right? Who knows? Maybe the German brokers are onto something. If so, where did all the 220 million shares go, right? So this is entirely speculative. I don't have any information to substantiate these claims. That's what Shane FAE says. He says, apparently the mess in the German brokerage is because they aren't happy to just blindly split existing shares. They're pushing back, and they want what their investors are entitled to, shares by way of a dividend. So where are the DTCC? Where did those 220 million shares go? There's only one reason this would happen, and I'm more bullish on GME than ever, okay? So what's really going on? So I'm thinking it could be an Ouroboros, right? It could be a worm eating its own tail, which comes back to the USA and the DTCC. So people started asking questions in America, and they started asking questions at Fidelity. And Fidelity confirms that they are handling the GameStop stock dividend as a split. Okay, this is a posting that was done based upon these interactions with Fidelity. Now, granted, they got a low-level guy who's he doesn't really understand what's going on, but he's trying to answer the questions as best as possible. This is the client services team, okay? How can I help you? Okay. I have a question about the GameStop stock dividend. According to the DTCC, this was technically a stock split, or was this technically a stock split or a stock dividend? Please check with a supervisor if necessary to ensure accuracy, right? Happy to clarify. Is this all the information? It says, yes, accuracy is very important. And he says, I believe the technical terms are stock split versus dividend, and I was wondering, according to the DTCC, did GameStop issue a stock split recently or a stock dividend? And actually, it's, he says, to clarify, I'm asking for what GameStop has announced. I'm asking if the DTCC is telling Fidelity to treat this GameStop split dividend as a regular stock split, or if the DTCC is telling Fidelity to treat it as a stock dividend. Thank you for clarification. No? And so Fidelity responds back, thank you for your patience. I just received information that the GameStop, the DTCC, and Fidelity are treating this as a stock split. At which point the guy says, thank you for the clarification. Please DRS my remaining GameStop shares immediately. And the rest of the posting is about how he's going to be DRSing his stuff, meaning he doesn't trust Fidelity anymore. Wants to make sure the shares are real and put somewhere else. Interesting. Okay. So let's unravel this Gordian knot that's going on, right? So what did happen? GameStop announced, this is from the GameStop website, and this is their press announcement. GameStop announced a 4-to-1 stock split. GameStop today announced that its board of directors has approved and declared a 4-for-1 split of the company's Class A common stock in the form of a stock dividend. Corporate stockholders of record at the close of business on July 18, 2022, will receive a dividend of three additional shares of the company's Class A stock for each then held share of Class A common stock. The dividend will be distributed after the close of trading on July 21st, 2022. Trading will begin on a stock split adjusted basis on July 22, 2022. Okay, that's what GameStop actually said. Those were their words. There seems to be a bunch of confusion over whether it's a split or a dividend. It is a split via dividend. The reason it matters is this posting by Dave Lauer, it looks like. It's very important because if there's a split, there would be certain tax implications, and if there's a dividend, there would be other tax implications, right? If there's a dividend, you have to pay taxes because dividends are typically taxable, okay? So the way it's being set up, so it's important to understand that it's a split first and foremost, so that it's a non-taxable event. The next question becomes, how is a split being distributed? It's being distributed as a dividend, which is why I've referred to it in the past as a split via dividend. This means instead of brokers just adjusting their books and records on the split date to reflect the increase in the number of shares someone was holding, GameStop distributed actual shares that are to be sent to all shareholders. Distributing a dividend is unique for a stock split. It's happened before, but it's not common. That's why many brokers did adjust your holdings on the X date, but it wasn't backed up by actual shares because it took time for those shares to transit the system and get to your broker, which of course they did. Okay. Since this is a relatively unique way of doing it, most brokers are probably treating it as a plain vanilla stock split because, again, it is a stock split. The systems are set up to accommodate stock splits. Books and records will do so appropriately. There shouldn't be any additional transactions, and most importantly, there shouldn't be any taxable events associated with it. The fact that some brokers are really struggling, especially for those of you who DRS'd, direct registered your shares, in between the record date and the distribution date, suggests that these brokers have hit an edge case that their systems weren't designed for. This is something in their software that they didn't design for, right? And of course, there are other possibilities, as have been extensively discussed in this subreddit. I'm not surprised at these posts that show brokers are treating this as a split, because it is a split, just distributed differently. I think the distribution mechanism has revealed some problems, but I'll leave that discussion for another time. Maybe the company is watching and hopefully protecting their investors, okay? This is basically what he's saying. Normally you have dividends, which are considered distributions, and they are typically taxable events. There's two types of dividends typically. There's unqualified dividends, which are taxed as regular income tax rates, and there's qualified dividends, which are taxed at long-term capital gains rates. Most people get qualified dividends. They don't get the unqualified stuff. Okay. Then there are splits, right? Splits are non-taxable events. If you have one share, you end up with 4 shares, 4-to-1 split, you know. So a split via dividend, however, is a non-taxable event. And how do we know it is being done via split via dividend? Because there is documentation about that. This is what's going on with GameStop. This is the documentation that they've filed. Okay. If we look at it, here's paperwork. And this is for the IRS, of course. And if we look at it in detail, this is about how to, this is a report of organizational actions affecting the basis of securities. Basis is a way to calculate how much you paid for a security. And if you look further down, we see on July 5th, 2022, the board of directors of GameStop approved a 4-to-1 stock split to be distributed as a stock dividend. The distribution was made on July 21st, 2022 to GameStop shareholders as of record as of July 18th, 2022. Each GameStop shareholder received 3 additional shares of the GameStop Class A common stock for each share of GameStop Class A common stock held by such a shareholder at the record date. No cash was paid in lieu of fractional shares. Okay? The distribution is intended to be treated as a non-taxable transaction for U.S. federal income tax purposes pursuant to IRS code, whatever. Okay. According to the tax basis of the new GME shares and existing GME shares with respect to which the distribution occurred, should be determined by allocating the basis in the existing GME share pro rata among the existing GME share and the new GME shares. Basically, your broker will take care of this, but this is the documentation that is being sent to the IRS. And as you see, it's a dividend intended to be treated as a non-taxable transaction. And it's non-taxable for federal income tax purposes. So it is a split via dividend. Okay. And we get back to the fact that the reason they're doing it is for tax purposes. They're doing the split via dividend for tax purposes. And it's natural, right? Now, this brings us back to the Dave Lauer post, which basically explains things in the best way possible. Thank you, Dave Lauer, for posting this on Twitter. Okay. So, basically, he says that if we look, it sounds like the GameStop stock split dividend has completely destroyed some brokers' back office systems. I keep hearing about the nightmare of dealing with TD Ameritrade. By this, he means that the software that runs the back office has found edge conditions and cannot deal with what's going on. Okay. Also, it sounds like overseas brokers are having serious problems, and German brokers are struggling to get shares to people. And yes, we know that. My opinion at this point, it's a bit late in the game. If you still haven't received your shares, you should get concerned. It's time to get concerned. For U.S. brokers, you should push hard to get someone senior who can help. Overseas, it's less clear to me what your options are. People keep asking me if this is a split first. People keep asking me whether this is first split as dividend and why brokers are having such problems. It's not the first. It's also not normal. It's very much an edge case. That means he means it's very much cases that particular brokers are having with their software in this particular case, right? And payment for order flow brokers usually don't invest in any tech that doesn't result in their customers trading more. Basically means they're not payment for order flow brokers aren't paying for software that doesn't result in their customers trading more, right? This is software that would go in for a particular condition for a split via dividend, which took place, and it's an edge condition, and as a result, it's something that they're not paying for. So you broke the software, basically, is what he's saying. I generally think with GameStop, there's a lot of back office problems, such as spikes in FTDs. It's possible that distributing the split as a dividend has exposed a lot more problems in how brokers are booking and holding shares for their customers. FINRA should investigate. Damn straight. FINRA should investigate. Because how they treat this stuff is important, right? You want to make sure you've got the right shares in the right way so it's non-taxable. And you also want to make sure that, it's distributed appropriately, okay? Even when shares are received, and some people report that the broker treated them as trades, not as splits, that means a different tax situation. If you're trading, that changes the date at which, you're getting the shares. and that changes your buy date. That changes your sell date. If you do a trade, although you may wind up with the same number of shares, your buy and sell dates change, which means that your basis calculation changes. It could be long-term or short-term. It could be long-term or short-term capital gains. So the time of the trade matters. You can't just willy-nilly do another trade and make everything right. Okay, it has to be done correctly. If the broker underinvests in back office systems, cause tax implications for their clients, that's a huge problem. You want to make sure your tax forms are correct next year, and you do, for sure. So it is August 1st. The dividend was distributed on the 21st after hours after the close of trading. The first day of split adjusted trading took place on the 22nd, and it's been a week and 2 days so far of split adjusted trading. Some people in Germany still are having problems with their dividend shares, and there are some questions. Did the DTCC really handle this appropriately? I don't know. We'll see. Or did something else happen? Did the back office of a lot of brokers break? It could be the back office broke as well, too. But I believe that brokers will eventually handle this correctly, okay? This will get sorted out. In either case, if you're a long, if you bought and held the stock, you're a long. You should have the correct number of shares in your account. This can easily be taken care of just by, you having older statements. You can show, hey, look, these are the shares. They were not sold. You should not be doing any transactions. There were no, shorts, however, will have to deliver shares if they have not done so already, okay? And to me, if they're having all these back office problems, it's possible, and it's probably likely that shorts have not delivered their shares as appropriate. That's why these back office problems are happening. That's what I'm thinking, okay? Again, my opinion. This is not the first time that a split via dividend has happened, okay? Tesla's done it before. Apple's done it before. So it is unique. It's unlikely to happen, but it's been happened in the past before with various different other companies. GameStop is not the first. They didn't invent the split via dividend. It happened way before, okay? Now, the DTCC may have issued some incorrect directives. I don't know if they have or if they haven't. It's possible. But if they've been found to be incapable of handling this event, then, I think GameStop would be justified in taking certain actions, whether it's, removing their stock from the DTCC or what. But if the DTCC is found to be incapable, that's a problem. And that's a good reason for them to, have shares that are not handled by the DTCC and handled by somebody else. And if that happens, then shorts are really screwed. That's why I think Ryan Cohen made this tweet last week. He said, the best time to be alive in human history is now. So if you have GameStop, it could be the best time to be alive in human history. You might be doing very well. But let me state, this is not financial advice. I'm not a financial advisor. This information is intended for entertainment and educational purposes only. Goodbye.